This is a review of the major asset classes for the week ending July 22nd and a look ahead for the following week. The first one we want to look at is the Dow Jones Industrial Average. And the first thing we look at is that it's at the top of the trading range. And if we look at the candles, we can see that on Wednesday we had a doji, high doji, followed by a gap down, and on Friday a bullish harami. On the Heikin-Ashi candles, which are very simple, very easy to interpret, we had a series of green bars signifying the uptrend, followed by two doji-like inside bars. And the fastest way, quickest way, and a reliable way to interpret Heikin-Ashi candles is that a series of green bars followed by an inside bar may signal a turn in direction or a reversal. Now, not every doji-like bar is a reversal, but almost every reversal is preceded by a doji-like bar, and that's the situation we have with the DIA and the other major averages. So if you're still long DIA ETF or components, then it's time, I believe, to tighten your stops and protect any profits that you have earned. We can see from the volume spread analysis chart that the run-up has been significant and powerful, but that ended on Thursday. The fast-acting Chaikin oscillator has been heading down but is not yet bearish, and accumulation distribution is still heading up. So we could expect perhaps a flat or sideways week, or maybe even a little up. No actual signal will occur until we get a candle signal below the 8-period EMA. But I think as far as the DIA is concerned, it's time to be cautious of longs. And we can reinforce that by looking at the Vike tape reader chart. And let's zoom in here. And the way this chart is constructed, we sample volume and price every 5 minutes throughout the trading day and draw a cumulative bar at the end of the day. And we can see that of the last 5 days in the DIA, corresponding roughly to this little island candle cluster, that 3 out of those 5, all 5 of those days have been distribution days, and 1, 2, 3 of the 5 have actually been up days. So that if you were reading just a normal candle volume chart where the volume was marked with green for an up day or red for a down day, 3 out of these 5 days would have shown them as positive up days, when in fact they were distribution days. So this is just another reinforcing factor for caution in the DIA and its components. The next one we'll look at is gold, using the Spider ETF. And gold is in a bullish trend and has now pulled back to the middle of the trading range. And if we zoom in on the Heikin-Ashi candles, we can see that we had a series of step down long red bars followed by 2 doji-like bars. So it's possible that this is signaling a reversal in gold. If we look at the regular candles, we almost had a signal, not quite, but a close above, say this bar is open, would probably be a good buy signal in gold. But if we look at the volume spread analysis chart, we can see that we're not yet in a strong trend in either direction. We're not getting a real positive reading from the Chaikin volume oscillator, but we can see that accumulation distribution is still heading up, which indicates that the longer term trend is still up because gold is being accumulated. And the next one we'll look at is TLT, which is the ETF for the 20-year bond. And like gold, TLT has pulled back to the center of the trading range. We have a series of red bars followed by an inside bar or doji-like bar. So there's a possibility of a reversal from the mid-range. And if we look at the last grouping of candles, we had a doji followed by a reversal green bar and a higher green bar. So I think that TLT, if you're short TLT, I think it's a good time to be covering your shorts, and probably a good time to be looking for long signals in TLT early in the week. The volume spread analysis chart is not yet indicating any serious buying pressure, but the Chaikin oscillator, which is the rapid response volume price oscillator, is heading strong up, as is the accumulation distribution. And we can see that if I move this, that gold is at the bottom of the range and should be considered oversold. So I think we want to be looking for a long signal in gold this week, and at a minimum tightening our stops if indeed you are short gold, because the possibility of a turnaround is better than even. Okay, let's look at oil with the USO. And oil is at the bottom of the range, but we can see that the standard line, or the mid-price line in the trading range, is expanding the range down. So the only things we got going for us as far as expecting or anticipating a possible reversal in oil is that we had a hammer-like bar at the low on Friday. It doesn't print as a hammer because of certain mathematical factors, but it is close to it. So there may be a hesitation or a slowdown in the downtrend. But the downtrend, if we look at the volume spread analysis bars, is still in effect. There's still a strong downtrend in progress. The rapid response Chaikin oscillator is heading down, and the accumulation distribution has rolled over and is heading down. Oil could be considered oversold, but at least as of the way we finished Friday, we have no reasonable reason to expect an immediate turnaround in the price of oil. So if we were short, you would be holding your shorts. And the last one we're going to look at is UUP, which is the ETF for the US dollar. And we can see that the dollar is at the top of the trading range, and the standard line or center line is heading higher, and that the cloud is pushing a little higher too. So we might anticipate that the dollar will continue to expand the range higher. Even if it doesn't make significant advances, we don't anticipate from the information we received as of Friday's close that we can anticipate an immediate reversal in the dollar index. And the volume spread analysis bars are showing buying pressure. The Chaikin oscillator is heading higher, and the accumulation distribution is not strongly heading higher, but is trending in that direction. So if you're long the dollar index, UUP, then you would hold long, and I would not anticipate an immediate reversal in the UUP. Well, that's our review for the major asset classes for the week ending July 22nd, and our anticipation of how we would handle these asset classes early in the week. Of course, a rapid one-day change could change the whole scenario, but as things stand now, that's the way we see it. The DIA, vulnerable to a down move. It appears that all the risk is to the upside, and you want very tight stops. Gold and bonds are in the mid-range, and we anticipate that there's a possibility at least of a reversal from the mid-range in a bullish fashion back toward the top of the range. Oil, represented by the USO, is in a strong downtrend, and there's no indication that trend is ending yet. And the dollar index is heading higher and will probably continue to go higher, even if not at a rapid rate, and we don't anticipate any immediate reversal in the dollar. I hope you found this useful.